Hi, viewers. Welcome back. Welcome back to VCTV. Venture Capital TV is from LaToken. I'm the host and moderator. I'm back after hosting a episode before on market making insights. Now I am going to be discussing about why the VCs are suddenly putting their dollars into the cryptocurrencies. And today I'll be joined by two special guests, family office and her partner, and we're going to discuss what's the roadmap looking like for crypto. Why is it catching all those attention for the good reasons, right? From the investors, the family offices. So yes, let's have a quick round of introduction of the speakers of the evening today, and here we go. Hi, Dr. Maren. Hi, Sanders.
Hey, Maren. Hey, Sonny. Welcome.
Yes, good to have you back. Good to have you both back on VCTV, and interesting times. Interesting topic as well, because we're going to discuss about the roadmap. How, when did VCs, family offices, institutional investors started putting their money into crypto, and why do they think that this asset class is going to bring them profits? It's very important. I know VCs how they work. They always look for profits, right? And obviously they put their money where they see the profit, right? So let's have a quick round of intro first. I'll have to start with Dr. Maren. Hi. Good to see you again, Dr. Maren. You are on mute.
Hello, Sonny. Thanks for having me. Hello to everybody. So I'm spearheading a family office and Schweizer's growth capital arm. So we are a hybrid between a family office and a corporate venture capital arm. We've been investing in 30 plus digital business models over the last 4 years here in Southeast Asia. The company itself is a dinosaur. Schweizer roots go back to, yeah, Sonny's laughing. I like to say that. The company roots go back to 1849. So we are 172 years old. And if we look back, there's always been a lot of change. And a cryptocurrency from various angles is a new thing you want to be in. So happy to be here today.
Thank you, Maren, Dr. Maren, for that introduction. I always, I knew when Maren is going to come, she's obviously going to discuss dinosaurs. So, besides flashes of the movie, I know why we sort of tried. We call the Schweizer family a dinosaur. I absolutely agree. Oh my God, long time back. Okay, welcome, Dr. Maren. Good to have you again on the show. And let's have a quick round of intro of our co-panelist and co-speaker today, who has just joined my panel on a very short notice. And I thoroughly want to thank people who join in a very short notice, because obviously everybody is busy. So I really appreciate their time on this platform. Sanders, you are on mute. I would please request you to unmute yourself and introduce yourself. Thank you.
Hey, Sonny. Thanks for having me. I'm Sander. I advise Maren and Schweizer World Group on multiple subjects, mostly on technology, also on new forms of business cases and how these would work in the future. And crypto blockchain technology is one of those fields.
Wow, good to know that. I think we had you on a NFT episode with Dr. Maren as well, and very interesting sort of ideas were coming out from that panel. So before we go into NFT, I would like to know the VC strategy for investing into crypto. First, Dr. Maren, over to you.
Yeah, for sure. I cannot speak for all VCs as they all have different objectives. So let me share our journey with cryptos. So back around summer 2019, we started looking into crypto investments, and we've been wondering, is that an asset class we want to be in? The answer has been yes. So then we ended up in how do we enter that asset class? A typical approach would just be you go on a long game hold, wait and see. That's basically what dinosaurs tend to do, right? So we put some eggs into one basket and leave it there for a long, long time. Uh, we've been wondering at that time, okay, how can we mitigate the risks in potential market volatility? Because we all do not have a lot of historical data, what crypto markets might do and what they have done since 2019. And I remember very well, Sonny, we've been in a VCTV show here talking about, I think we talked about Bitcoin, and that's been back the time when we've been expecting that Bitcoin will cross the 20,000 mark. And just look where we are today. So we are all smiling. So we are not giving any investment advice, and we cannot predict what's going to happen. But it's definitely an asset class you want to be in.
Great, great, Dr. Maren. Yeah, I remember. I think when I started having VCs and family offices like yourself on this panel about Bitcoin, I think the subject was, is Bitcoin the new digital gold? And absolutely, we come a long way since then. We can all play back our videos and have a look at those discussions. But yeah, right. Okay. Over to you, Sanders, with the same question. I mean, so Sanders, are you, first of all, I'd like to know, I'm a little curious, are you involved with cryptocurrencies from a long time, or you've just sort of discovered this asset class because of the huge noise around it? Or, I mean, let's start with your journey.
Well, it's actually funny because this is the story of how I got to know Maren. Um, 3 or 4 years ago, I was trying to boot a company and get it funded. Company is called This Is Fashion, and the strategy that we had for this, but we were a little bit too early, was a stock token offering. Meaning, in our case, we would have our limited, which would have shares. These shares would go to a special administrative foundation. In Dutch, this is called a stock. And shares would be held there. For every share in existence, a token would be issued, and these tokens would represent the actual share. The voting rights would be automated by this token, come with an app, to pretty much make having shareholders more approachable for small companies in terms of voting, in terms of shareholder meetings, and being able to do and decide everything online. And also to automatically pay out dividends using these tokens. What we didn't, this was a very, very new idea at that moment. It took a lot of research to get there. What we didn't anticipate at that moment was the amount of resilience against crypto in the market at that time. And in our case, this was especially difficult because we were not really a crypto thing. The underlying asset was an actual share of the company. It wasn't a computation. And people were already wondering with Bitcoin, like, is this really worth something? Will this keep being worth something? Is proof of work really a thing? Or is this just a Fugazi? In our case, because it was linked to crypto, it was a token, but it was not crypto because it was a hard asset underneath. People really didn't know what to make of it. And this was one of the things that made it really difficult to use this as a funding system. But it did connect me to Maren Schweizer. And it taught both Maren and me a lot about how crypto works, what the functionality is, what it can be used for.
So yes, I mean, underlying asset shares, those are security tokens, I guess, right? I mean, that would fall
Yes.
into securities. Yeah.
Yes, they're very much a security.
Yes. So when it comes to my next question, obviously, that space is, I have seen waves where I've seen STOs where, like, a thing in the past, we had ICOs in 2015, 16, then STOs obviously were a thing, and then slowly sort of STOs got more regulated. Like, you know, they people who were doing STOs or doing securities, they obviously, that space is heavily regulated by SEC. So I would like to know, what's the future? I mean, do you think, because I think SEC and US considers all the token securities, irrespective of if they're utilities or they are stable. I mean, they consider everything securities. But in general, what do you think? Is regulation a very important aspect when it comes to consumer protection, investor protection? And how are we evolving in that space when it comes to crypto regulations? Dr. Maren?
Certainly, regulation is an important topic, first of all, and there needs to be regulation. You could argue more on how do you do it. So that's the question. We are looking into it. What's a good and clever way to transfer into regulation? But any asset class without regulation will not work down the road. Don't get me wrong. I don't want to state that early adopters in the crypto space they are looking for Wild West. It's the opposite. They are not looking for Wild West. Nobody wants Wild West. So that calls for regulators and regulation. So there can be for sure the harsh regulation that's blocking access to crypto markets or to certain cryptos, or do it in a proper way. So I believe there's a lot to learn from innovation in technology, how you can do that. So we are in favor of sandboxing. So create a sandbox, apply the regulation in the sandbox in a limited space of the overall crypto ecosystem, and see how it behaves in the wild, in the sandbox, and then potentially pivot, and at a later stage discuss it between the regulators and then roll it out globally. Because anyway, it needs to be a global standard, very similar to ISO standards we have in various industries. If not, it's going to be intransparent, it's going to be complex and costly for all the players who are in there.
I think very good point. If crypto needs mass adoption, I totally agree. It has to go through a regulatory landscape, and sandbox is where they start their life cycle before they get that mass adoption. Uh, Sanders, would like to hear from you as well. What's happening in that space as per you? Because consumer protection, investor protection is very important when it comes to any kind of investments.
Yeah, actually, it doesn't really have to be super complex. For me, this really depends on the class of assets. Having a regulation on an NFT, for example, would make no sense. This would be like trying to regulate the art market, which is unregulated, and the NFT represents the same thing. We should look, if we're talking about regulations, the things we should look at is how do we do this in real life already? An NFT is a digital representation of a piece of art. A stock token is a digital representation of a share. All of these things we already know. They're not different because they're crypto. They can be regulated in exactly the same way because they are exactly the same thing. So in terms of regulation, I think if we use what we already have, we're already there. There's no difference between a stock token or holding a paper share. They are both the same thing.
Yeah, but that space is regulated, right? The traditional stock market space. Yeah.
Of course. If I issue shares, then I cannot, if I want to publicly issue shares, so not for private investments, not me asking Maren, I would like you to invest in my company, then a lot of regulation is involved. And especially if you're talking about Americans, it's why most companies try to not have their first investments from smaller investors out of the US. The SEC is really, really harsh and really difficult to work with. You can, as a company, you could technically only work with accredited investors from the United States because of how the SEC treats investment.
Yeah.
meaning it's really hard to raise friends and family there. But when it comes to these things, most countries already have the regulations in place. Again, I don't think crypto is a thing that needs to be regulated as one thing, because this would destroy pretty much all innovation in crypto. And one crypto is not the other crypto. These regulations need to be tailored and work with what the asset class actually is. And I think that's where we're lacking at the moment.
Yeah, I think that's interesting. I think I've heard this before, where people say regulations are going to kill innovation in the crypto space, but we see a lot of scammy. We see a
Oh,
lot of rogue tokens in the market
there's
as well.
there's a good question to be had here, because like I said, the most important things, like if you would tokenize stocks, we have regulations for this. They should be the same regulations as that would apply to a normal stock. Meaning, if I want to start selling my stock on Binance, which is a public offering, I would need to comply with the same rules as I would for an IPO. However, if you take a look at a blockchain in general, blockchain is unregulatable by design. You can regulate Bitcoin if you have more than 52% of the processing power, and that's not going to happen. The same thing goes for Ethereum. So in terms of regulating currencies themselves, I don't think there's a way to do this, because it's been designed to be unregulated by default. The same thing would go for the difficult thing is, if you take a look at rug pull coins that are being launched, meaning coins that get a lot of interest in the beginning, then the founder has the biggest part of these tokens. He cashes out, and he pretty much screws everybody over that invested, like a classic rug pull scenario. This is impossible to implement regulation for, but you can actually implement regulation against this type of behavior. If I would do this with a normal company,
Yeah,
I would get severely punished for this, and this would be fraud. This goes the same for a situation where something is a rug pull. If there is mismanagement, full mismanagement, and it's intentionally pulling the rug on people, not a founder doing some stupid things and going bankrupt, because that happens too,
yeah,
then that person should go to prison for running a scheme. But it's not one regulation that would fit everything, because the situations are so different. And if you would take one regulation that regulates everything, then it means that almost nothing is possible anymore. And yes, that would definitely kill innovation.
yeah. I think
may I jump in here with a thought? I think it's important that we consider the purpose of any regulation before too much thinking about the tools, if they can work or not. So overall, it's consumer protection, isn't it? And the crypto space is not the only asset class. Consumer protection is also important in a lot of other asset classes. And anybody who already did some investments somewhere might have come across. So if you want to invest into a fund, you are facing funds with fund managers in place who can address accredited investors. Accredited investors are those who potentially have more knowledge, more market insight, or even have an investment committee with a very diverse expertise to evaluate the risk associated with the investments. While typical retail investors, so the consumers, they might just not have it. And I think regulation should actually focus first on consumer protection, and the fund structures, the fund manager licenses that are associated in most legislations all over the world, they may just serve as a good example how this can be structured and also segregated. So one approach for all will not fit.
Yeah, right. Very rightly said. Don't regulate the currencies, don't regulate the NFTs, but regulate the institutions who are holding these currencies, like a fund, like obviously Dr. Maren rightly said, and the platform that sells NFTs, right? The uh, Obviously we have a lot of marketplaces. Okay. So I just want to know, Maren. I mean, obviously, this is a new. I remember that you wanted to get into NFT space as well, like So want to know what are the sweet spots in the crypto landscape, especially from your perspective. Like, would where do you think you're going to put your dollars into when it comes to crypto?
We have two lenses actually. So it's the cryptocurrencies themselves. That's one investment opportunity for us. We've been looking into it. And secondly, it's to invest into business models that are preparing emerging value propositions in the crypto landscape. So looking at business models, we are interested in three sectors. One is those who are focusing on value propositions in respect to user interface. Secondly, NFTs, but also we are looking at decentralized finance business models. So that's more from the VC family office perspective, investing into startups and helping them to grow. While another angle is as a VC, buy cryptos as an asset class.
Hmm. Interesting. Interesting. So yes, thank you, Dr. Maran. So Sanders, coming over to you. I think your sweet spot is definitely NFTs. So just let's hear what happened since we last spoke about the NFT project. Like you're planning to NFT many things, right?
Yeah, I'm actually working and brainstorming on that project with Maren because Maren is going to be the one running the project if we decide to build. But it doesn't limit itself to NFTs itself. I think the question that you're asking is a little broader. I like to solve problems and use technology and the right tools to solve them. And blockchain is the right tool in a lot of different ways and in a lot of different cases. But I think one of the things that I look most at, also in other projects, is does it actually make sense to, for example, deploy a new token, or doesn't it make sense? And should you just leverage existing blockchain technology because you would have the same use case? I think one of the issues that we have within the whole crypto landscape right now is that just like in the ICO storm of 2017, everybody's just launching coins for no reason at all, and these tokens I really don't believe in. I think with whatever you build, it needs to make sense. If you want to do crypto payments, then do crypto payments. Don't make an extra coin. Do the crypto payments. Write the smart contracts that do this, and build them into a platform. And if you want to do it the right way, then your focus should actually not be blockchain, but it should be utilizing the blockchain in a way that really works for your users and makes it a seamless experience. I think actually there's a lot to be gained for UX design and the user experience to use these products. And it has much less to do with a complex technical problem that will scare your users away.
Yeah, I totally agree. I mean, I think all my sessions, every speaker I've spoken to, be it an investor or an entrepreneur, I mean, obviously successful entrepreneurs, that has to be underlying asset back to that token. I mean, just building a token for the sake of and hyping it is not obviously sustainable. Yes, that's absolutely correct. Thank you so much for sharing that. I think NFT still remains my sort of favorite space in the crypto world for some reason. This non-fungible tokens after Bitcoin. Yes, Bitcoin was my first favorite. Now it's NFTs. So the market, I see a lot of things happening in the NFT space. A lot of players actually moving. into the NFT space. And the funny thing is, they are building this NFT platform. And they're also having a token to support sort of fundraising and other stuff. So every project has its own unique way of fundraising as well. So so that's about the crypto landscape. I also remember, Maren, that you also invested into a trading platform, if I'm not wrong, crypto
Uh,
trading.
yeah, let me share a little bit the background. So when we've been looking into cryptos, we've been wondering how can we mitigate the risks of sudden downturns. And with a classic team of asset managers, we doubted that this might work out due to 24/7 trading, due to high frequency trading. You need to be super rocket fast. So then we've been introduced, luckily, to a company developing machine-based learning, automated trading. For somebody who's not a Gary Gilloos like Sander is, and that's a compliment for you, Sander. It's really difficult to judge what this black box is, and that's basically what I also hear as a feedback. If I share my thoughts about AI in general, oh, that's a black box. That does something, it does something, but I don't understand what it does and if it really works. So we then monitored that company developing. We helped them as a mentor. We've been the sounding board over 2 years, and this company succeeded. And what I can share, they are going to launch soon the first regulated crypto fund with automated trading, but it's only for accredited investors.
That's very interesting. I have seen a lot of crypto funds, but for institutional investors is something which obviously is very limited space. But good to know that, Maren. Thanks for sharing that. So, Sanders, would you like to add something about what Maren just mentioned?
Actually, when it comes to trading itself, I really suck. I like to buy things and keep them and have more of a Warren Buffett style of investing in cryptos, because I did this experiment where I gave myself some play money, some money that I could miss, just to train my trading skills and see where I could get for 3 months. I put in somewhere around €1,000. I started trading leveraged. I bumped down to €200. Then I managed some really big wins, and I shot all the way up to €15,000, and then I lost it all again. So in terms of trading is a really tricky thing to do yourself, and especially if you're trading leverage, because if something goes wrong, then you get liquidated and you lose everything. It was an enjoyable experience, though. It was really funny, except for the losing part. But when it comes to true investment, and this is not just a crypto thing, this is something that would, for me, float pretty much everywhere, is go for long-term investments, because they make more sense anyway. The moment you buy and sell a lot, this comes with a lot of tax regulation on top of this, because you have your capital gains tax that you need to think about. But if you buy into projects that you believe in long term, just buy in and hold it, and don't overextend yourself. As far as trading platforms go and automated trading, this is a very cool space. And I'm pretty sure that this would work a lot better than most trainers could do by hand, because if you look at how things work, trading by hand and winning, even though every trader is going to be very angry at me for saying this, is luck for a large part. You cannot predict a short-term movement of a token. You can only predict a long-term movement of a token, just like it's almost impossible to predict the short-term movement of a share. the only thing you need is a whale buying or dumping at one moment in time, and you're wrong, and you don't have any control there. Everything you make in games is luck. Everything you lose is being not so lucky. But that part is a casino, and I think AI is actually better able to predict short-term movements than humans are, because we're bothered down by our egos, and we think we're really good at stuff, and most traders think they're really good at stuff, but guess what? You suck too.
Well,
Uh,
yes.
well, your experience when your portfolio went down to south and then imploded, I think that can be avoided with automated trading. And actually, the high volatility we've seen to a certain extent in some cryptocurrencies lately, they've been very well welcome from our point of view, because that's been proving that the automated crypto trading tool is really working. Only if something goes very fast to the south, the tool can show its performance, what it did. So I can just underline, if you're more into a short-term play in the crypto market, please consider automated trading. Look at companies who are in that space and make sure that they have the track record and the data, that they can really show you not only simulations, but real-time cases when they've been on the exchanges. And you should also ask them, what's your trading frequency? Are you trading once a day? Are you trading hourly? Are you trading in a 5 minutes interval, or even faster? Because that's one of the important KPIs we've seen.
Yeah, I think yes, automated trading is definitely for those ones who believe in short-term gains. And obviously, Sanders doesn't believe in gambling and casinos. I gather that.
I believe in gambling and casinos, but also believe that that is what it is. It's gambling, and it could make and it could lose.
Yeah. Okay. Cool.
The good thing about automated trading is that it filters out our biggest problem in trading, and that is our ego. A
All right.
computer doesn't have emotion; it just looks at data, and therefore is usually better at making decisions than we are.
Agree. All right. I think this is a short episode. And thanks for joining in. Both, I think Marino was obviously that was scheduled, but Sanders, thanks for joining in for this episode and giving some sort of content to our viewers.
More
Closing
than
thoughts,
welcome,
Sander.
Sonny.
Let's take some
Closing
closing thoughts.
parts? Well, as always, I am a very big believer and will keep being a big believer in the blockchain revolution. I think regulation is needed, but I think we need to really look at what is already regulated and extend this into blockchain for the largest part, because you cannot regulate blockchain as one beast. I think one of the biggest dangers for blockchain would actually be overregulation, where it starts to interfere with innovation. And we need to watch out for this. For example, I think it's very important that friends and family funding would be possible, but you would not be allowed to ask people outside of your network for initial investment, for example. This way, it would help you fundraise for smaller projects. But I also believe the consumers need to be protected. It's a difficult thing, and we need to find our way there. And as far as NFTs goes, I think NFTs are actually something that will revolutionize the way that art is being sold at the moment.
Right.
Not just in digital art, but also in physical art, and having a same construction as an STO has, where the physical piece of art underlies the NFT.
That would be interesting to see. That would be interesting, actually. A digital art pegged to a physical art. That will be really interesting to see. Because what the thing is, because I was talking to somebody in this NFT space, and I own the IP rights of that digital art, but what about the physical art if I would like to I have access to, right? I mean, That's something, this market is still very unexplored, I would say. I think that's a very good one, which is obviously futuristic. I think this is something which is going to come next. But thanks, Sanders, for those closing remarks. Dr.
Yeah, I think we should do another session on that bundling idea, because we talk NFTs, but with the technology, I think you can have a lot of value in respect to a certificate of authenticity. I managed to pronounce that word. Hey, authenticity. So actually, it's a very neat way to use that instead of paper certificates that are stamped, sealed, signed, and so forth, or kept somewhere in a safe box to make sure that they cannot be copied. My closing remark would be to all creators out there, if you're looking and watching our show, NFTs is much more than only a digital version of art. It's basically a complete new model for creators. And I'm convinced it's going to open doors for a complete new audience and opening a revenue stream for the creators that didn't exist before. So it's making creators more successful while using technology, especially in difficult times, financially speaking. So have an eye on it. Have an eye on it, what's going on there, and you might want to consider be part of it if you are a creator.
Fantastic. Thank you so much, Dr. Maren and Sanders, for this episode today. And again, I'll be back. We'll be back on another episode, I'm sure, very, very soon to discuss about NFTs, automated trading. Automated trading is something I would like to know as well more about. And I'm sure our viewers also would like to know for those who are not long-term traders, right? So it's for them. So yeah, we'll be back soon. And viewers, thanks for being a part of this show as well. And always like your support. I have seen so many comments here, but unfortunately, we do not have that much of time to go over all those comments to respond. But we definitely would get back to you. Thank you, Dr. Maren, Sanders, and I'm going to catch you on another episode. Till then, take care. Bye-bye.
Till the next time. Thank you for having us.
Bye.